Stellar's total value locked has surged from under $10 million in early 2024 to nearly $200 million today. The network reached a peak of $206 million on April 23, 2026, marking a period of explosive growth. Messari reports a 284% year-over-year increase, rising from $44.9 million at the end of 2024 to $172.6 million by the close of 2025. This growth continued into the first quarter of 2026, with DeFi TVL on Stellar increasing 1.1% quarter-on-quarter to $174.4 million, even as XLM's price dropped 16.6%. The fact that TVL remains stable despite the token price decline indicates strong protocol-level demand rather than just price-driven activity. Lending protocol Blend has played a key role in this growth. Blend's TVL has been supported by an attractive APY on USDC deposits, which has consistently held above 8% in recent months. This is a competitive rate compared to protocols like Aave v3 and Sparklend, which have offered APYs between 2 and 5%. The higher returns are attracting users who are looking for better yields in a crowded DeFi market. Beyond DeFi, Stellar's real-world asset market has also expanded rapidly. The RWA market cap, excluding stablecoins, increased 91% quarter-on-quarter from $796 million. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. To $1.52 billion at the end of Q1 2026, it briefly surpassed $2 billion on April 11. This growth was driven by government-backed assets such as Ondo's USDY and Spico's EUTBL, USDBL, and UKTBL. These assets represent a growing trend of institutional adoption on the Stellar network. In November 2025, US Bank announced it was testing the custom issuance of its own RWA on Stellar. This signals a shift toward greater institutional trust in the network's infrastructure. The combination of DeFi TVL growth and RWA adoption suggests that Stellar is attracting both retail and institutional capital. The network's ability to maintain TVL despite a weaker XLM price is a strong indicator of underlying demand. This is important because TVL is often inflated by token price movements, but Stellar's case appears to be driven by real usage and protocol adoption. The APY rates offered by Blend are a key factor in attracting liquidity. These high yields are helping Stellar compete with more established protocols in the DeFi space. The fact that these rates have remained above 8% for an extended period shows that the protocol is able to sustain user interest. This is a positive sign for the long-term viability of the network's DeFi ecosystem. The growth of Stellar's RWA market is another significant development. Real-world assets bring traditional financial instruments onto the blockchain, making them accessible to a broader audience. This expansion could help Stellar attract new users who are looking for ways to tokenize and trade real-world assets in a decentralized environment. The involvement of institutions like US Bank suggests that Stellar is becoming a more attractive platform for financial innovation. The continued growth of TVL and RWA market cap indicates that Stellar is gaining momentum across multiple sectors of the crypto ecosystem. This is most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A positive trend for the network's long-term prospects. However, the sustainability of this growth depends on several factors, including the continued attractiveness of APY rates, the expansion of RWA offerings, and the overall health of the DeFi market. The next signal to watch is whether Stellar can maintain its TVL growth as market conditions evolve. If the network continues to attract new liquidity and institutional interest, it could solidify its position as a leading DeFi and RWA platform. Investors and analysts should monitor key metrics such as TVL velocity, APY trends, and institutional activity to gauge the network's trajectory.